Yes, thank you. So to create a bill initially, that's the first step. What we want to do is this is your ribbon in QuickBooks, and we want to go over to the expense section because that's where your bills are. So we click on the bills, and then in here, what you can do is you can add all your bills. So you were saying that you've got some for the subscription and then your franchise specific bills. So you can click on this box here that it says add bill, and you can either upload it from your computer. And what it should do now, again, some software is a bit temperamental. And so what you can do is upload it, and it should then pick this is the date, this is the value, this is the supplier. Sometimes it might just need a personal touch to have a look at has it actually pulled in the right information, like the VAT specifically. It's an AI thing, you know, it's learning, it's trying to figure it out. So just in case it hasn't picked it up correctly, have a look over your bills before you do anything with them in the system, just in case. For example, if you're doing a VAT return or something like that, you want to make sure the VAT is right. What you can also do is use create bill. So that is, it brings up a blank bill. You know, it's a blank template and you can just create a bill. Alternatively, if you know it's going to be a reoccurring bill that is going to be, you know, every single month, same value, you can create it there as well. So for example, we'll click create bill. And what you want to do is you want to create, again, like you'll have to do this obviously the first time for everyone. And you can either do it en masse or you can do it as you create the bills. And then once you've created them once before, they'll come up here. So I've already created a test supplier for you just for our trading today. But if you then have someone's information and it's a new supplier, you can click add new. It will then have this pop-up box and you can put in all the relevant information. You don't need to put everything in here. You just need to choose a supplier display name. You could leave the rest of it blank. However, if you put this information in, what it can then do is you could say, I want to create this bill and I want to share this bill with the client. And so this is your billing tool. You can then basically have all their information in the bill, get it downloaded PDF, and then it's there for you. So it looks more professional, basically. So again, some of this information you might not want to use, but some of it you might. So again, have a play around with that. And yeah, there's a lot in there. And then you can click save. So that creates the supplier. You can also create the supplier, like I say, on bulk, different way, and I can show you how to do that later if you want. Basically, yeah, you can create them en masse. So once we've created our supplier, so again, I'm just going to use test one. You then want to put in the relevant information. So I've already used this test supplier, and so it's recommending the category for me. You might have a different category that needs to be used every time you use the same supplier. It might be the same category. So this is the category is the account, the account code, and therefore where is this money going to get allocated to when it comes to your reporting. So we might say that it's a marketing tool, and therefore that's what we're going to connect it to. For yours company, you have a specific chart of accounts that have been created from your head of office. And so hopefully there's something in here that is applicable. And if it's not, then you can add new and you can create a new account code. But yeah, have a quick look through that list because you have got quite an extensive list in there. And I believe that links with some other systems you use. So again, it should be in that listing is my understanding. In the description, what is it you're buying, basically? And this, just to go back quickly, the category is never going to be director's loan account. It is always what is the bill for? Because in this instance, right now, all we're saying, what are we buying? I don't care who paid it. I don't care where it goes from that perspective. What is it we're buying? Is it IT equipment? You know, that sort of thing. That is what we need to put in here. And then we put the value. And then again, whether it's got VAT or not will come through when we set you up as a VAT company. Otherwise, it will just assume that's the total cost. So again, that's why it's there. You can change the bill date, the due date. They both need to have a date in there and it will automatically suggest today's date. So again, change it if it's right. You don't have to add a bill number. It will automatically put one in. But if you want to start having bill numbers, you can put that in for reference. Terms, again, you could add that if you wanted. So yeah, there's again quite a few different things and an attachment you can add if you want. So if you had a quote or you have the actual bill from the client, I would put it in the attachments here. So you have all of your physical bills in one location, because making tax digital, you are required to have all of that now digitalized and available. So if you were to be audited, if you have it all in here, you can just go, auditor, there's QuickBooks, bye. And you don't have to go searching for those bills. So I would get into that good habit of saving them all in the one location. And then if your laptop breaks and you lose your folders, for example, you know it's in the system and in here and save. But then you would click save, or you can click save and new or save and close. So to get save and close, you click on that box, the arrow, and then save and close. If you at this point think actually this is a reoccurring, you can also change it as reoccurring, and you can also print it before you save it if you wanted. So I'm not going to save it today just because it's our test. So I'm going to close that there and leave without saving. So once we have the bill, what we want to do is, so I'm going to open one previously. What we then want to do is we want to say, I need to pay this bill. And this is where, because it's a director's loan account, you have two options. You can either pay it under your bank account that you're going to connect, so the main bank location, and then you do a journal, transfer it into the director's loan account, or you set up a bank account that you then call your personal bank account. And this is not connected to any bank account, but it's your personal bank account, like pot of money. And then you then know at the end of the year or at a certain point in time, you can then say that bank account needs to be run down to zero, and you do one journal at the end of the year. And again, as your accountants, they'll be able to do that. And they can then move all of that into the one location, and you don't have to worry about doing journals all the time. Because if you do the first approach, which is bill to your normal bank account, your company bank account, you would have to, if you have VAT returns quarterly, you would have to do that journal on a quarterly basis. If your accountants do your bookkeeping on a monthly basis, you'll have to then get that journal done on a monthly basis as well. So it's a little bit more work to do more often. And it can therefore get a bit messy, because basically if you come to look at your bank account and reconcile your bank in QuickBooks to your bank account bank statement that you physically have, say HSBC, it won't match because you haven't done a journal yet. And that's where it gets a bit complicated. So this first option, I wouldn't recommend. I do the second one just from a cleanliness perspective. I'm just going to show you it so that you are aware of how to do it. So what we do is we would allocate the payment. So we would say, let me unpay it, and then split payment.
Just to let you know, we are VAT registered now.
Okay, fab. Okay, so do you have your VAT number? We can put it in here today if you want.
Yes.
Yeah. Do you want to get that, and we'll do that in a bit? But if you have it ready, we can then look to do that. So I'm just going to play around with this. So now would have happened is you would have this bill and you're saying, actually, I don't want this bill to be on my creditors list because I've already paid it, because I paid it personally. So this list, if you go onto your expenses, bills, and then if you click on your unpaid, you will see that this one is due or overdue. So again, this says it's due today just because I left it as today's date. So what we want to do is mark this as paid. So again, this is if you're doing the first option. So we click mark as paid, and then that will populate the amount paid. So that populates it here, and it populates it here. You can do this manually as well, but this is just a nice quick way of doing it. So that's the amount paid. It then says amount to credit or amount to apply. So we're applying £100, therefore it balances to zero. So we save and close. That means our bill currently has been paid, and therefore it comes off our list. Now, because we've paid it to bank account, because that's where I selected it to, we need to move that from one bill, one bank account to our director's loan account. So to do that, you want to go into new and then journal entry, because you're going to journal and move it to a different location. And so this is again free template, blank template on how to move it. So we then choose the relevant bank account and we choose the relevant director's loan account and then move the money. So again, what I'll do is I'll just show you what I've done previously. What's the other one? One. The original journal, we would say our bank account currently has the bill. So therefore the bank account needs to be debited. And then the director's loan account needs to have this bill put into it. So therefore it gets credited. So again, I've just left it called test. Obviously you'd put in what it is. So you could, for example, call it director's loan account, correction, what the item is. You don't have to transfer everything on a one-by-one basis. So if you do, 2 bills this month, you can just do a transfer for the whole thing. If you put the detail in here though, that's absolutely great because then you can easily see what it is you're transferring. Again, you can just say to your accountant, I've put in X amount of bills. Can you allocate them to my director's loan account? And they can do that for you. That should be part of the bookkeeping fee that they do. So again, a lot of this they might do themselves, but if you are to do it to save on the money, this is how you do it. And then once you've created the journal, you could choose the today's date. If it is you're doing this for last month and you want to clear it as of last month, so your bank statement matches, then change the journal date to be the 30th of November, 30th of September, so that your bank statement will definitely balance. So that date is quite an important one. And again, it's either save and close, or save and new. And that will then put your journal in. So you now have correct bank account balance, and you now have a director's loan account that has the bill, and you also have the bill in here. So from a cost perspective, your business is showing the right values, and you also are reporting a director's loan account. So that's option 1, which is a bit messy because there's quite a few steps. So option 2, we can go back. So if I just delete that journal, because then I can clean up as I go. Option 2, we go straight back to this bill, and where we have this bank current account here, again, I've set it up already for you. But what we can do instead is we can just allocate this to the personal bank account. And so we then just do that, change it there, save and close. Yeah, so I want to modify, so that's fine. And so what that does, it takes it out of your business bank account. And then again, like I say, you can change it on a monthly basis, you can do it on a quarterly basis, or you can do it at a year-end basis, depends what you want to do. But basically we're saying your personal bank account, you personally have paid this much money. It is not said in your reports, it does not show it as a director's loan account, but it suggests that it's a personal bank account. Therefore, your accountant would look at that and say, oh, well, it's a personal account, therefore it's director's loan account. Therefore, that's where I do one journal, again, monthly, quarterly, annually, however they choose to do it, depends what they're doing. They'll then move it into the right location. What it does mean that is your bill is in the right location because again, you've set the bill up, say this is the VAT value and it is an IT cost. Therefore, your VAT returns will monthly be correct and therefore quarterly be correct. And all you need to do is correct the director's loan account at the end of the year. Officially at the end of the year is the best time to do it because it means your accounts are right. It doesn't matter from a reporting perspective, from an accountant's perspective, whether it's right from a quarterly, monthly perspective. But if you want to make it right, then obviously you can get that journal updated earlier. And that's that. I can show you if you would like as well, just to show what that looks like in your reports. So in your balance sheet right now, by having it in your personal bank account, it will show it here and it will show it as a minus. And so all your accountant would do at the end of the year is move that whole balance, put it as director's loan account, and that's it, it's cleared down because a bank account should never be, well, credit card can obviously be a credit, but if it's not an actual bank account, it should never be with a balance at your year end. It should be moved to that director's loan account. And that's it.